So I've just finished cleaning up and it's now time to review Tesla's epic Q3 earnings call and results. Some bombshells in here, ladies and gentlemen, at least if you're paying attention. So let's have a look. But first, don't forget, join Patreon, unlock over 180 exclusive videos and up-to-date access to my Tesla stock price targets by joining with the card in the corner or the link at the pinned comment. First, a few quick highlights from the earnings report, then we'll get onto some highlights from the call itself. Operating cash flow of $3.3 billion with a B, billion dollars in Q3. A $2.2 billion increase in cash and marketable securities in Q3. In a single quarter, another $2 billion in the bank. Oh, is that all? And spoiler alert, this is just the beginning. Profitability, $3.7 billion of GAAP operating income with a stunning 17.2% operating margin in Q3, $3.3 billion GAAP net income, and a 27.9% GAAP automotive gross margin despite new factories ramping up in both Austin and Berlin and increasing materials costs and supply chain challenges. Also, record energy storage deployments of 2.1 gigawatt hours in the quarter. A few quotes. We achieved an industry-leading operating margin while encountering material headwinds year over year. We began transitioning to a smoother delivery pace, leading to more vehicles in transit at the end of the quarter. We remain focused on increasing vehicle production as quickly as possible. A few key highlights here. Automotive revenues up 55% year over year. Automotive gross profit up 42% year over year. Nice. Total revenues up 56% year over year. Interesting to note, an almost perfect correlation between scaling automotive revenues and total revenues. And net income attributable to common stockholders up 103% year over year. Some more highlights here. Total revenue grew 56% year over year in Q3 to $21.5 billion in a single quarter. There was also an increase in average selling price year over year. Quote, our operating income improved year over year to $3.7 billion in Q3, resulting in a 17.2% operating margin. Once again, I want to highlight this. This is stunning growth, a stunning operating margin, and an indictment on the entire automotive industry. Tesla's making everyone look bad, and I mean super bad. There was also a negative impact of $250 million this quarter due to foreign currency fluctuations. Interestingly, Model S and X production up 123% year over year. Q3, almost 20,000. This annualizes to about 80,000 vehicles per year. Personally, give or take, I expect the market for S and X combined worldwide, globally over the long term, probably somewhere on that 80 to 120,000 units per year. And huge growth with storage deployed. 62% year over year increase in megawatt hours of storage deployed. Keep an eye on Tesla's energy business. Battery storage for home users and grids and utilities and commercial customers in coming quarters. This is going to be a huge growth driver for Tesla in the future. Then again, what part of their business isn't going to be? A few more quick quotes here. In Q3, each of our vehicle factories produced a record number of vehicles. And by the way, guess what? In Q4, they're just going to copy and paste the same line. And in Q1 next year, same over and over and over. Just watch. We continue to implement solutions to further increase the production rate in Fremont. Again, this is important to understand. Tesla continues to eke out incremental capacity increases at their existing facilities, even the cluster Fremont. Eventually, I believe this facility alone will get to capacity of close to 1 million units per year. Currently, as we can see on screen now, installed capacity of 650,000 units per year. It wasn't long ago that this was 450,000. Tesla underscoring that our factory in Shanghai remains our main export hub. And regarding Europe, our team in Germany produced more than 2,000 Model Y vehicles in a single week using 2170 cells. Simple math here, 2,000 a week times 52 weeks is over 100,000 units per year in terms of run rate already at a newly ramping factory. And as we see along the bottom, market share of Tesla vehicles by region, trailing 12 months, US and Canada, Europe and China, all trending toward 3, then 4, then 5, then 10, then 15+%. Keep an eye on this in coming quarters. And of course, one thing to emphasize, even though it was in the last report, I believe, highlighted here, model, robotaxi and others. One more time, and others, plural, others. Tesla is working on multiple other vehicles besides the robotaxi platform, and one of them is most certainly not Tesla's secret van. And now quickly onto autopilot and full self-driving. This is a big one. AI Day resulted in a significant spike in applications for AI-related roles, which was the entire point of the event. It was a recruiting event. Mission accomplished. And 160,000 Tesla drivers in North America had access to FSD Beta at the end of the quarter. 160,000. As we see here, cumulative miles driven with FSD Beta in millions, growing exponentially. From zero, back in March 2021, to around 60 million miles in that time. Remember, data is how this thing is won. Energy storage deployments increased by 62% year over year in Q3, to 2.1 gigawatt hours. So you can see on the chart on the right here, a huge increase in energy storage deployments, and this still just getting started. Solar deployments increased 13% year over year. Also worth keeping an eye on, but this won't be a major growth driver for Tesla for years to come. In my opinion, solar is like the cream, the icing on the cake. It's really about the battery storage. And again, just for the skeptics, over a multi-year horizon, we expect to achieve 50% average annual growth in vehicle deliveries. And I've saved the best till last, ladies and gentlemen, my favorite metrics every quarter, key metrics over the trailing 12 months. Vehicle deliveries, growing exponentially. Operating free cash flow and free cash flow, growing exponentially. Net income and adjusted EBITDA, growing exponentially. Can anyone guess what next quarter looks like? And the following quarter? And the following quarter? The trend is pretty clear. And finally, an absolute stunner. Let's zoom in for this one. It's that good. Tesla's operating margin over the trailing 12 months in red versus the automotive industry in grey and the S&P 500 overall. Notice, Tesla has now exceeded operating margin of the average S&P 500 company and is miles ahead of average automotive industry operating margins. And it's still early days. They're still just getting started. Now we're going to run through some of my notes, highlights from the earnings call. Full of typos, I'm sure. And by the way, every quote in here won't be direct and word for word. I'm not trying to misrepresent. Just typed out my notes and now I'm recording this video. Haven't reviewed them because I want to get this out ASAP. I'm sure you can appreciate that. On to the opening remarks from Elon Musk. Just a quick recap on Q3. Record quarter, including industry-leading operating margin, free cash flow in excess of $3 billion in Q3 and over $9 billion across the last year. Elon confirms, looking forward to an epic, record-breaking end of year, reiterating that Q4 is looking, quote, extremely good. Again, confirmation that Giga Berlin has exceeded 2,000 vehicles per week and Giga Austin will reach the same milestone soon. Elon also pointing out that if we extrapolate yesterday's production, it's already at 2,000 vehicles per week. Again, annualized rate over 100,000 vehicles per year already. Rapid progress is being made on the 4680 cells. By the way, ladies and gentlemen, there really are some fucking gigantic bombshells here, so stick around. This is the stuff that people will miss if they're not paying close attention. Regarding AI Day 2022, Tesla's epic recruiting event, Elon confirming that Tesla saw a massive influx of world-class AI engineers and scientists. The event generated a tremendous amount of interest from the best in the world. Quote, it has finally become clear to the smartest AI people in the world that Tesla is the best. Now, this is very important. If you think Tesla's just a car company, you're probably not going to understand why this matters. But if you understand what Tesla's really doing and what they're all about, this is hugely important. AI Day 1, bit of a joke. Person in a bot suit, haha, they're dumb, they don't know what they're doing. A year later, stunning progress. Oh, they're serious. I might send my resume Tesla's way. More confirmation, Q4, Tesla anticipates wide release of FSD beta in the United States. And regarding the question of demand, which came up a lot apparently in the last quarter, a lot of people asking Tesla, maybe their investor relations, hey, what's happening with demand? I heard a rumor from some guy on the internet, on YouTube, that there's no demand in China, etc. Tesla addressing these comments. I can't emphasize enough, we have excellent demand for Q4 and expect to sell, quote, every car we make as far into the future as we can see. If ever in doubt, come back to this quote. Elon also pointing out, we only have 3 million of the 2 billion vehicles on roads to date. A long way to go. And round of applause, ladies and gentlemen. We got their fucking attention. Share buybacks. Quote, we've debated the buyback idea extensively at the board level as a result of being pestered relentlessly by Tesla retail stock investors. So congrats to everyone else tweeting at Tesla, sharing videos, reports, articles, and so on. It actually made a difference. The board generally thinks it makes sense to do a buyback. It is certainly possible for us to do a buyback on the order of $5 to $10 billion, even, and this is important, even if next year is a very difficult year. This is obviously pending board review and approval, so it's likely we will do some meaningful buyback. There we go, ladies and gentlemen. Almost a done deal. Stay tuned for an imminent announcement of Tesla share buybacks in the coming months and quarters. And thank you, Tesla. I'm glad you were listening. Elon also pointed out that in the past, he once said that Tesla could exceed the market cap of Apple, and it happened. Quote, and now I'm of the opinion that we can far exceed Apple's current market cap, which is multiple trillions of dollars, just for the record. He continues, I see a path for Tesla to be worth more than Apple and Saudi Aramco combined. Won't be easy, but for the first time, I see a way for Tesla to be, let's say, twice the value of Saudi Aramco. This is the first time I'm seeing that potential. And later in the call comes a gigantic mic drop moment from Elon. So remember this particular quote when we get to that. It'll make sense when we get there. Zach Kirkhorn's opening remarks. reiterating that Tesla has epic margins, including their epic operating margin. Zach also confirming that the Austin and Berlin production ramps weighed heavily on margins, especially, 2 typos here in the span of 3 words, compared to Q2. Not Q1. Berlin and Austin production already contributing to profitability. So even though they're weighing on margins, the vehicles being produced in Berlin and Austin are already profitable, just nowhere near as profitable as Tesla's fully ramped production at Fremont and Shanghai. This is very important to understand. They're already printing money at these factories, despite the fact that they're at a fraction of their ultimate long-term production capacity. Now, regarding the end of quarter delivery push, the delivery wave, this is stunning. 2/3 of all of Tesla's Q3 deliveries occurred in the final month of the quarter, September, and 1/3 of all vehicles delivered in the entire quarter were delivered in the final 2 weeks. Absolute fucking madness. This shit needs to stop. Tesla's paying expedited shipping costs, getting absolutely reamed because they're urgently desperate to get vehicles to customers in these last few weeks. They're at a point now where it's meaningless. Who cares? Let them get delivered next quarter. Who gives a fuck? And Tesla's now acknowledging that. Further reiteration, Tesla is on track for 50% production growth, but supply chain risks still exist. And confirmation, Tesla expects to come just under 50% delivery growth due to vehicles in transit. And Austin and Berlin ramps will continue to weigh on profit margins, but less in Q4 than they did in Q3. Now on to the shareholder questions. Oh, and I should warn you, make sure you're sitting down for this. Massive bombshells coming soon. I'm not f***ing around. Regarding the Inflation Induction Act, Tesla expects to fully meet the requirements. Quote, "We're going to go pedal to the metal as fast as possible to get 1,000 gigawatt hours of production in the US. Also some comments regarding different regions in the world. China economy looking a bit shaky, especially the real estate market. Europe in particularly bad shape at the moment. We all know the reasons why. And the Fed raising rates in the US more than they should." I mean, this is the perfect storm to bankrupt a company that can't survive, that isn't agile, that isn't resourceful, that doesn't have compelling products, insane profit margins, and an unassailable lead. Thankfully, that doesn't apply to Tesla, but you know who it does apply to? The rest of the automotive industry. Rest in peace. Further reiteration that Tesla is extremely confident that they're likely to grow production 50% per year. And hilariously, quote, "There weren't enough cars, trains, and ships to meet Tesla's delivery needs this quarter. They literally grew too big." Good problem to have. Tesla will continue to grow revenues, production, etc. at 50% or greater annual compound growth rate. Some years will be a little bit less, some years a lot more. And there was an interesting quote here. "In some of our future planning, we see annual growth rates over 50%, meaningfully over 50%. So these numbers are not being pulled out of Tesla's ass. They've got a plan. And in their future plans, they have years in which their production scales at more than 50% in a single year. Think about that. No, really. Pause the video and let that one sink in. Also, further confirmation that future products do exist, but Tesla doesn't want to jump the gun and announce them yet. Regarding the German energy crisis, even if Berlin production goes down, and there's no indication it will, it won't be a problem. Regarding Cybertruck, Elon describing it as sick, a Hall of Famer, and next level. First Tesla Semi deliveries to Pepsi on the 1st of December. This is going to be huge. Musk also took an opportunity to troll the semi-doubters, saying that many people over and over, "The number of times people told me it's impossible." And then I said, okay, well, what are your assumptions? At which point, Elon was met with nothing but tumbleweeds. Somebody being exposed for not having any idea what the they're talking about. "Oh, but what about hydrogen?" Okay, sure, but show me your assumptions on battery electric vehicles. "Oh, I don't have any. I just heard that hydrogen was better because Trevor Milton told me." We also heard that Tesla is tentatively aiming to do about 20,000 units of the Semi in 2024. That will be difficult, but I'd love to see it happen. Elon also pointing out that one Semi is worth several Model Ys in terms of revenue and profitability. We also heard casual mention that Tesla needs to get to 300 to 400 terawatt hours of battery capacity per year over the long term. Again, pause the video and do the math on that. It's a fucking ridiculous number. Elon also pointed out that due to the EV transition, he believes that the public realizes it's now foolish to buy a gasoline car. Commenting on Tesla's business, e.g. predominantly EV sales, Elon said, well, it's not recession-proof, but recession-resilient. And this is absolutely a fair point. You know some companies and technologies that aren't recession-resilient? ICE vehicles. I mean, ladies and gentlemen, perfect storm. It's going to be seriously hard work for legacy automotive manufacturers and new EV startups in the coming years. Another important quote should go without saying, but it was said, and strangely it doesn't go without saying for some people. Quote, "We can withstand quite a lot of downside before we have to dig into expansion plans, okay? Let's talk about this point in a little more detail. Tesla's modeled things out, and they know that even if the shit hits the fan from every fucking direction at the same time everywhere, they're printing so much money that even if they have to cut prices, even if their costs go up, blah, 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 even if they get from every direction at the same time without consent, they'll still be able to continue expanding at the maximum pace, spending every spare cent, every dollar on their expansion plans. That's what a position of strength this company is in. Nothing short of World War III would slow Tesla's growth down. Now, this is separate from their margins contracting or expanding, but the point is, because Tesla's printing so much money and so highly profitable already, even if their margins get catastrophically crushed, it's still not going to eat into their expansion plans, unless literally World War III. In which case, there's probably more important things to be worried about than Tesla's execution and growth. We also heard this fascinating quote. We tried to model out, let's say 2023 is a brutal recession year. Even then, we generate meaningful cash. Just wanted to point this out to all the adults who think that a global recession is going to adversely impact Tesla. And regarding the next generation vehicle platform, without saying too much, we heard this. This is the primary focus of our new vehicle team. Are you sitting down, ladies and gentlemen? Please make sure you're sitting down. We've done the engineering for Cybertruck and Semi, blah, blah, blah. Tesla's new vehicle platform is the primary focus of their vehicle team because they've got nothing else to work on. Remember the Q3 report, Robotaxi and other products, other vehicles? Not just one of them, many of them. That's what everyone's currently working on. In addition, quote, our next generation vehicle will be about half the cost of the 3 and Y platform. This is the bombshell of all bombshells. Please make sure you understand what this means. Their next generation vehicle platform, not the generation after the next generation, their next generation vehicle platform will be about half the cost of the 3 or Y. Do you understand the implications, ladies and gentlemen? This is fucking enormous. Of course, it's not surprising. Shout out to my Tesla valuation model, which has this very assumption in it. Although, in fairness, my Tesla valuation model does have this vehicle, but stupid me thought there'd be an interim step as well. Platform about 30% cheaper than 3 and Y, then the subsequent generation being about 50% of the cost of 3 and Y. Looks like Tesla's skipping straight to the finish line, and I'm okay with that. Now, I am laboring the point, and for good fucking reason. One more time. Our next generation vehicle will be about half the cost of the 3 and Y platform. Did you know that the Model Y is already on track to / is, depending on what region you're looking at, the best-selling vehicle on Earth by revenue and soon to be by unit volume, and that's at that price, not half price. Just saying. Additionally, quote, it will exceed production of all our other vehicles combined. Again, literally. Let me see here. How many units do I have for the half-price vehicle selling? Oh, that's right. A vehicle around half the cost of a 3 or Y. Addressable market about 15 million units per year over the long term. Yes, I said it. Yes, I mean it. And yes, it has been and continues to be in my Tesla valuation model. It's right fucking there. It's literally half the price. I mean, it's all there. I ain't making this shit up. If you're a Patreon member and you have access to my Tesla valuation model, have a look at the file sitting on your computer right now. I called it the Model Z, which followed the Model Q. By the way, if you're not a member on Patreon, click the card in the corner or the link in the pinned comment to join. Tesla asked themselves the question, can we make 2 cars for the amount of effort / costs it currently takes to make one Model 3 or Y? Ignore the typo. And we do believe this can be done. Elon confirming it'll be a difficult path with incredible execution required, but they genuinely believe that 2 times the valuation of Saudi Aramco, definitely in Tesla's future. And then the mic drop of all mic drops regarding Tesla's valuation being multiple trillions of dollars, $4+ trillion. Obviously, quote, I wasn't including Optimus. Now, this should have gone without saying, but Elon did say it, and this is the mic drop of all mic drops. The guy's just come out and said, yeah, I think Tesla realistically $4+ trillion. In the future, I can see a path there. Oh, that's not including Optimus. If I talk about Optimus, you'll laugh me off the earnings call, so I won't say that yet. Just between you and I, the impact of Optimus on Tesla's valuation, revenue, profitability over the long term is going to make everything else they've ever done in the company's history look like an insignificant joke. Adam Jonas came out swinging, asking about mining. Will he get into the mining business? Elon's response? We'll do whatever we have to. If we have to mine, we'll mine. Regarding FSD rollout and autonomy, quote, I think we'll have enough data next year to show regulators that the car is much safer than the average human. Also, the amount of OPEX will tick up over time. In other words, how much money Tesla is spending will obviously continue to increase over time as they scale up, but top line will grow much faster and there's lots of room to improve further. In other words, there's going to be a non-linear relationship between how much Tesla's operating expenses increase a little bit and how much their revenue and profitability increases a lot. this is a good situation. And this is important, especially for some of the investors out there who don't really understand this about Tesla. We're investing in everything we can think of, everything they can possibly think of, they're investing in. And they're still generating lots of cash. Understatement. It's a good place to be. No shit. People don't even know all the R&D stuff we're doing. Now, this was a juicy hint. I wonder what Tesla is doing that we don't know about. And regarding talent, engineers aren't coming off an assembly line like cookies. There was a hilarious joke about, well, not until the Optimus spot anyway. Excuse the typo here. Where are the most brilliant people working? Musk goes on to point out they all want to work for SpaceX and Tesla. Graduating engineering students surveyed confirm this. It's true, and this really matters. Do you really think the world's elite engineers are lining up to work for Mary B.S. Barr and change the world with the ultimate battery platform and government motors? No, they're not. Elon brilliantly pointing out, one Nikola Tesla, as in the person, just in case you guys forgot that there was actually a person before the companies. One Nikola Tesla is frankly worth an infinite number of good engineers. You can't make it up on volume. Again, emphasizing elite engineering talents. This is like the special ops of engineering. People don't seem to really get this. One brilliant big brain engineer can literally do the work of hundreds or thousands of decent engineers. This is not an exaggeration. There are some people out there who are so competent and capable, so efficient and resourceful, so brilliant that they can carry a fucking company on their backs. And Tesla is full of people carrying the company on their back. Good situation to be in. Elon also observed, I think Kathy Wood at ARK Invest is trying to make this point over and over and over to the Fed, and they're not listening. This was regarding declining commodity costs as a leading indicator. Inflation starting to come back. Meanwhile, the Fed's raising rates like there's no tomorrow. Morons. Elon continues. The Fed's decisions make sense if you look in the rearview mirror, but not if you look out the front windscreen, which is where you should be looking. Regarding Twitter, Twitter is a languished asset with incredible potential. We're obviously overpaying for Twitter right now, but the long-term potential is 10 times greater than its current value. Translation, long-term, Twitter worth $500 billion, give or take. Now, I'm not sure if I was high and hallucinated this, but I'm pretty sure we also heard, quote, we're also building a lithium refinery. Later in the call, there was comments that they're thinking about building one, so I'm not sure which is which, but don't be surprised when this is announced officially. And a super insightful quote here. We see a path to around a $70 per kilowatt hour battery cell before incentives. Again, if we really want to understand, take the time, look at the numbers, think about the implications. This is bananas. We also learned, surprisingly to me, the Semi doesn't use 4680 cells yet. So Tesla's Semi is actually going to begin deliveries with 2170 cells. Also confirmation that some of the Model Ys from Giga Texas are using 4680 cells with the structural battery pack, which seems to suggest not all. Elon also pointing out the obvious. There are some companies where all they do is make battery cells, whereas this is simply one segment of Tesla. And finally, some very interesting comments to close out the call. The chance of commercial success on FSD, Dojo, and Optimus. Elon says, we'll achieve full self-driving, full autonomy. Probability of that occurring is 100%. Regarding Optimus, probability is extremely high. Given enough time, probability is 100%. Regarding Dojo, however, there's more of a question mark. Can we be competitive with NVIDIA GPUs, even as NVIDIA continues to rapidly evolve its GPUs? The jury's still out on Dojo. We'll probably know next year if it's true. Elon also pointed out that the form factor's right. This is the winning form factor. It's now just up to execution. This was a truly epic earnings call with some serious bombshells, lots of juicy insights, and plenty of gems. The biggest of all, without doubt, Tesla dropped the fucking bomb. The next generation vehicle platform, they believe, will be around half the price of the Model 3 and Y platform. Not 20% off, not 30, not 40, 50% off. Now, my strong suspicion is that the Wall Street stock analysts won't get it or won't believe it. How's that even possible? The finance media won't even mention it, because, as if that matters. And a few smart retail investors will realize the stunning implications. Remember, a linear decrease in the price of a vehicle causes an exponential increase in demand. So what happens when you have a compelling, super safe, technologically advanced, fast, efficient electric vehicle for half price? Yeah, I don't know what happens either. Somebody please let me know in the comments below. I just can't figure it out. Fremont capacity is increased. Shanghai capacity is increased. Austin and Berlin are both already at annualized rates of over 100,000 vehicles per year. 4680 cells ramping up exponentially. Semi deliveries to begin in December. Cybertruck almost done. Vehicle team now fully focused on new vehicles, not one, maybe 2, 3, 4, who knows? Multiple vehicles. Tesla's a path to release a vehicle around half the price of their existing 3 and Y. Tesla reiterating they're willing to do whatever it takes, whatever they need to, even if that includes getting into the mining business. Massive progress on autonomy. Excuse the pun, but Tesla firing on all cylinders, printing absurd amounts of money, almost recession-proof, and well on their way to a multi-trillion-dollar valuation. And yes, on the cusp of approving a $5 to $10 billion share buyback program over the near term, with Tesla stock at absurdly low levels. I'm glad Tesla was listening. Let me know what you guys thought about Tesla's Q3 earnings below. Any insights that really stood out to you? And lastly, don't forget, join Patreon with the card in the corner or the link at the pinned comment. You'll gain instant access to my Tesla price targets out over the next decade in the worst case and the best case and in between. Plus, over 180 exclusive videos and counting. If you're not on Patreon, you really are missing out. You can join with the link at the pinned comment or the card in the corner. Love ya.